Hello guys, welcome to our channel CA Cult. Today we are going to discuss about calculation of income tax. The topic is quite common, but the purpose of our video is that the changes in income tax, especially under the new tax regime, and share trading is quite common nowadays, and salaried employees majorly focus on their TDS deduction only. But what about the tax on capital gain, if any? So today we are going to calculate the income tax of salaried employee which is also having the income from capital gain. For the purpose of ease of understanding, we are going to take the short-term capital gain as our example. So let's get started with. First of all, let's understand what is the basic exemption limit. The basic exemption limit is the limit up to which your income is not chargeable to tax. Under the old tax regime, the limit is 2.5 lakhs, and under the new tax regime, the limit increased to 3 lakhs. As you can see, in a slab rate under the old tax regime, the income up to 2.5 lakhs is tax rate is nil. And when it comes to the new tax regime, up to 3 lakhs, the tax rate is nil. Secondly, there is a concept of rebate under section 87A. Under the old tax regime, if your income is up to 5 lakh rupees and your tax liability at the rate of 5% leads to 12,500 rupees. So the rebate under section 87A is 12,500 rupees. That is, if your income is up to 5 lakh under the old tax regime, then your tax liability would be 12,500 and you may get the benefit of rebate which is also 12,500 and your net tax liability would be the zero. Same on the other hand, when it's come to new tax regime, the rebate up to 7 lakh is available to the assessee. Now the good news for the salaried employees that the standard deduction from salary, which were earlier up to 50,000 rupees under the old tax regime, now it has been increased to 75,000 rupees, but only for the new tax regime. That is, if you are opting for the new tax regime, then your salary up to 7,75,000 will be liable for zero tax. That is, 75,000 would be the standard deduction, and for the remaining 7 lakh, you may get the rebate under section 87A. Therefore, if you are a salaried employee and you have opted for the new tax regime, then your income up to 7,75,000 would be liable for the zero tax. On the other hand, if you have opted for the old tax regime, then the standard deduction is same as it was earlier, up to rupees 50,000 only. Now, let's come to the main point, and the purpose of our video is that the calculation of tax for the salaried employees, those are having the income from capital gain as well. And again, for the purpose of our understanding, we are taken the short-term capital gain only. So let's start with an example. This is an example where we have taken the same amount of income under the old tax regime and new tax regime. The gross salary would be 4.5 lakhs and then standard deduction, and then there is the short-term capital gain on the sale of shares. There is a disclaimer, and the important update for you is that the tax rate on the short-term capital gain has been changed from 23rd July 2024. That is, if you have sold the shares and having short-term capital gain up to 22 July 2024, then the tax rate would be 15%, and on or after 23rd July, the tax rate has been increased to 20%. Let's understand an example with the help of the calculator as given on the income tax portal. So this is the calculator income tax portal. Here we are going to select the current financial year, that is the relevant assessment year 25-26. First of all, we are going to calculate under the old tax regime. So let's enter the amount. Salary is 4,50,000, against which we are getting standard deduction of 50,000. Here you can see they have already been bifurcated the short-term capital gain on the basis of the date. Up before 23rd July, it's 15%. On or after 23rd July, it's 20%. So I am going to enter my short-term capital gain 20,000 here. Now my total income is 4,20,000. Here you can see 4,20,000 is our gross total income. Now we are getting the benefit of basic exemption limit, and income which is to be taxable is 1,70,000. Here you can see we have mentioned that the tax at slab rate on salary is 7,500. Here you can see the tax at normal rate. The normal rate is tax at normal rate means the tax at slab rate. So the tax on salary is 7,500, and tax at special rate, that is short term capital gain, which is liable to tax at the rate of 20% if we are going to sell on or after 23rd July. So now our capital gain was 20,000 and the tax rate is 20%. So the 4,000 would be the short term capital gain, tax on short term capital gain. Here you can see the tax at special rate is 4,000. Now the rebate under the old tax regime is 12,500 and our total tax before rebate is 11,500. Therefore, we are getting the benefit of rebate under section 87A and our net tax liability is zero. Same when it comes to the new tax regime, all the particulars of salaries and the capital gain would be the same. Just switch from old to the new and we can get to see the difference. Here you can see the standard deduction has been increased to 75,000. The second change, you can see there is a change in the taxable income from 4,20,000 to 3,95,000 due to 25,000 increase in the standard deduction. Therefore, you can see the tax at normal rate, that is the tax on salary is 3,750 rupees, and the tax at special rate, that is the tax on capital gain is 20% of 20,000, that is 4,000. Here you can see the total tax before rebate is 7,750 only, but we are getting the rebate under section 87A only on the income which is taxable at the normal rate, that is we are getting the rebate only for the salary portion. But what about the rebate for the tax at special rate, that is what about the rebate on income from capital gains? In the new tax regime, this is the point that under the new tax regime we are not getting the benefit of rebate under section 87A if we are having the income from capital gain. Here the tax on capital gain was 4,000 plus cess, therefore we are liable to pay 4,160 rupees under the new tax regime, even though your total income is less than 7 lakh rupees. In the above example, if the salary is up to 7 lakh 75,000 instead of 4 lakh 50,000 and the short term capital gain is same, that is 20,000, then also the tax liability would be the same because you may get the benefit of rebate under section 87A. Let's see. Here under the new tax regime, if we increase our salary from 4,50,000 to 7,75,000, then the 75,000 would be the standard deduction. And as you can see in this slab, the income up to 7 lakh, the tax at the rate 5%, for which we get the rebate under section 87A. So from 7 lakh 75,000, the 75,000 would be our standard deduction, and on the remaining 7 lakh the tax amount would be 20,000 rupees, for which we are going to get the rebate under section 87A 20,000 rupees. And again the tax at special rate on short term capital gain is the same, 4,000 rupees, and this is what we were liable to pay in our earlier example. Therefore, if your income which is taxable at normal rate has been increased to 7,75,000 rupees, that is income from salary, then the tax liability would be zero. But if you are having the income which is chargeable to tax at special rate, then on that particular income the rebate is not available for you and you are liable to pay tax on that amount. And the last point is that please do not fall for the trap that income up to 7 lakh rupees is free from tax if you are having income from capital gains. Usually you can hear from others that income up to 7 lakh is free under the new tax regime. That's true, but when it's come to the income under capital gain or income which is taxable at special rate, then the income up to 7 lakh rupees is not fully exempt from tax because the rebate under section 87A is available only for those income which are chargeable to tax under the normal rate. And if you are having the income from capital gain, then the rebate under section 87A is not available to you, and you are liable to pay tax on such income, as you can see in earlier example. Therefore, for all the salaried employees who are actively involved in the share trading as well and having some short-term capital gain during the year, then please take a note that you are liable to pay tax on that gain as well, either at the rate of 15% or 20% as per the date of sale, over and above the amount of TDS which has already been deducted on the salary. Therefore, please calculate the income from capital gain during the year and deposit your tax accordingly. Okay, guys, this is from my side. Thank you. Thank you very much.